Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Risk off. Equity futures sink while treasuries join a global bond sell-off as Donald Trump's latest tariff threats revive trade tensions. Gold hits a fresh record amid the flight to safety. Europe weighs its response to Trump's tariff salvo, but divisions linger as Germany urges caution on using the EU's most powerful countermeasure. Plus, with trade tensions set to dominate day two of Davos, we'll bring you interviews with heads of state, central bankers and global business leaders. Well, welcome to Tuesday. This is your picture in markets. Yesterday, we saw Europe whacked, really, from credit to cars. And today, the US set to play catch-up because, of course, we did have a long weekend stateside. Hence, the divergence between US and European futures. You saw Citi downgrading European stocks for the first time in over a year because of the reaction to President Trump's tariff threat on the 8 nations opposing his Greenland plans. But if you are looking for somewhere to seek refuge, treasuries are not the usual safe haven. You can see treasuries joining this global bond sell-off, and we'll be diving into that in the programme. But in terms of your risk events on the docket for today, at 7 a.m. London time, we'll get the latest UK jobs data. That cooling in the labour market expected to continue at the back end of 2025. Then, again, we're on the lookout for a potential Supreme Court ruling on President Trump's Liberation Day tariffs. The trade representative Jameson Greer saying that the Plan B will be effective immediately if they're deemed unlawful. And then at the top of the hour, we're going to be waiting for an address from the US Treasury Secretary Scott Bessent. He'll be speaking at Davos. Of course, the theme of this year's summit is a spirit of dialogue. Will that mood take him? He's already said that the president will not be backing down on Greenland. So much could happen today. Let's set you up for the day ahead. We begin this Tuesday in markets. Treasuries joining a global bond sell-off after Donald Trump's tariff threats linked to Greenland reignited trade tensions. The president's targeting of several European allies and the UK is raising questions about how the dispute could affect demand for US assets. For more, let's bring in Bloomberg Markets Live executive editor Mark Cudmore. Mark, there is a lot happening in markets this morning. The dollar's slide continues. US futures are pointing lower. Treasuries are selling off, along with JGB's by the way. But is this the Sell America theme reignited, or, Mark, is it something else?
I don't think it's the Sell America theme reignited. I think, we've had a little bit of a catalyst for risk aversion coming from Greenland. So far, markets aren't reacting extraordinarily to that because we've seen so much of this idea of taco, Trump always chickens out, that theme, and they expect there'll be a backtrack. People don't expect the tariffs to be imposed. They don't expect there'll be a military war over Greenland. At the moment, they feel there's noise around this. They're going to price increasing risk aversion as a result of this ongoing theme, which is unlikely to be resolved quickly. But it's almost being overshadowed by what's happening out of Japan today. JGB 30-year yields up 25 basis points, and that's what's now feeding into global bond markets, and will feed in much more later. You've got to remember this is the context of the US holiday yesterday. So we'll see yields in the European session jump higher. We'll then see that feed through to the US. It's really quite extraordinary what's happening out of Japan. And in many ways, that's becoming the bigger driver of risk aversion than what's happening out from Trump on Greenland. So I would say he's not catalyzed Sell America. He's catalyzed risk aversion with an overlay of wanting to diversify away from the dollar. And it's that kind of extra tangent which gives it a little flavor of maybe US assets underperforming in some ways the margin, but not in bond markets.
OK, and we're looking at gold at a fresh record, silver up as well by a touch, Mark. Where else do you see the risk aversion showing up?
As I said, I really think that by far the most exciting thing happening today is in the Japanese bond market. And I think that's going to feed through globally because, this is a very large bond market. But also, it's not just that. It's the fact is that Japan owns assets all over the rest of the world. As those yields at home get more attractive, now bear in mind, 30-year yields are up 40 basis points, or I think it's 38 or 39 basis points, but about 40 basis points since Friday. So it's quite extraordinary moves. Now, once those yields go high enough, Japanese investors are going to start kind of returning home to their domestic market. And that means pulling out of assets around the world. And it also blows up the yen-funded carry trade. So this is a potentially massive kind of dynamic that is going on at the moment. Now, it's going to play out slowly because at the moment, there's no reason to go back into the JGB market just yet. There's no floor in that market, and given that we're going into election, we're expected to increase the debt profile in Japan. So that's the most kind of extraordinary dynamic in the very short term, and certainly the Japan election is going to stay dominant at the moment. You're right to talk about precious metals. They are certainly the beneficiaries of this demand to kind of diversify away from fiat currencies. You've got the governments behind the world's two biggest fiat currencies, the dollar and the euro, at increasing tensions, and people want to diversify away from those, and they want to go into real assets, and precious metals win on both fronts. So they gain from geopolitics, they're real assets, they're seen as a store of wealth away from fiat currencies. I'm a little bit worried about that dynamic. As risk aversion increases, and especially as you see bond market sell-off driven by what's happening in JGBs, then at some point the dynamic in precious metals could turn negative very quickly. Now, we're not at that point yet. But it's one of those markets where the positioning is very large. They've seen extraordinary gains that if there was a sudden pullback, it could become self-driving very quickly, and it could be very sharp.
Mark, thank you so much. That's Mark Cudmore, Bloomberg Markets Live Executive Editor. We'll dive into Asia markets in just a moment, but diving into the Greenland story, US President Donald Trump renewing his push for Greenland, claiming that he doesn't think that the European Union will push back too much. Speaking in Miami, Trump called the island a national security necessity to counter Russian and Chinese influence, claiming that Denmark lacks defensive capability.
Well, I don't think they're going to push back too much. Look, we have to have it. They have to have this done. They can protect it. Denmark, they're wonderful people. And I know the leaders are very good people, but they don't even go there. And, you know, because the boat went there 500 years ago and then left, that doesn't give you title to property.
Bloomberg's chief Europe correspondent Oliver Crook joins me now for more. Ollie, we've just had Trump posting on Truth Social his exchange with the French President Emmanuel Macron. What do we know?
Yeah, Lizzie, I came here prepared to talk about the trade negotiations, but now about 19 minutes ago, Trump has come out on Truth Social and posted what appears to be a text message chain with the French President Emmanuel Macron. This is what it seems Macron has written to the president. Again, all we know is that this is what Trump has posted. It says, from President Macron to President Trump, "My friend, we are totally in line on Syria. We can do great things on Iran. I do not understand what you are doing on Greenland. Let us try to build great things. One, I can set up a G7 meeting after Davos in Paris on Thursday afternoon. I can invite the Ukrainians, the Danish, the Syrians, the Russians in the margins." That's a sort of interesting note there. Two, let us have dinner together in Paris and together on Thursday before you go back to the U.S. Emmanuel. So this appears to be what Emmanuel Macron has written to Donald Trump, to an appeal to basically try to get more conversation and dialogue between the President of the United States and Emmanuel Macron and other G7 allies in the midst of what has been a very sort of chaotic few days here ever since Saturday night, when Trump has effectively announced those 10% tariffs that will be effective on February the 1st because of Europe's resistance of letting the United States annex Greenland. I do think it's interesting that Macron here is talking openly. I mean, openly. He's talking to the President of the United States. It is now being shared openly to the public about including the Russians at the margins of some of this dialogue potentially on Thursday. So, you know, Lizzie, this is I'd say a very fast evolving story. It's changing very rapidly. Again, what we go into this Davos with is the President of the United States continuously reiterating the need to get Greenland, and now we're seeing potentially, you know, a G7 meeting in Paris that's hosted by Emmanuel Macron on Thursday, and of course there's the emergency EU leaders meeting that'll be on Thursday evening here in Brussels. So we'll see how all this evolves.
So, Ollie, that's the transatlantic relationship. We've also got the German Chancellor Friedrich Merz and the French President Emmanuel Macron taking different views on how to approach the Greenland issue. What's likely, or what's looking likely, to be the European response to Trump's threats?
Yeah, we're going to have to wait for Thursday for that European leaders meeting to get that real exchange of views from all of these leaders. I mean, I think what we should say is that from the very beginning, even in the first trade war that we had last year, Emmanuel Macron is one that tends to come out swinging much more than Friedrich Merz. And there's a very obvious reason for that. The German economy is much more dependent on exporting goods to the United States than are the French. Friedrich Merz, basically in the first trade war with the United States, said that we'd rather get a fast deal than the perfect deal, trying to get things rolling, get things over the line. But I think think that what will be very interesting, Lizzie, what I'll be watching for on Thursday is what the other countries of the European Union have to say. What does Italy have to say? How do they feel about it? They were not targeted by the tariffs. They sort of had a message of solidarity for the other Europeans. But what about the Eastern European countries? What about Poland? What about the Baltics? They're much more concerned of the United States abandoning the issue of Ukraine than they are potentially on Greenland. So we'll see what that debate sort of unfurls on Thursday here in Brussels.
OK, Bloomberg's Chief Europe correspondent Oliver Crook, we thank you so much. Now, let's get to the market that's already trading. Mark Cudmore flagged those outsized moves when it comes to JGB yields. Winnie Xu joins us from Hong Kong with an update on Asia markets. Winnie, that bond sell-off in full effect in Japan, but perhaps for more localised reasons?
Yes, exactly, Lizzie. As you mentioned, it is those concerns when it comes to fiscal budget and the government spending that's weighing on Japanese bonds, specifically after Prime Minister Takaichi confirmed her snap election to come next month. And here we're talking about, for example, the 40-year yield passing or hitting that 4% level, which is the highest level since debuting around 2007. And also, we did have a very weak bond auction when it comes to the 20-year JGBs. We're talking about the weakest demand since more than a decade ago. And now the yields here are up 20 basis points to its highest level since the 2000. Now, also, when it comes to the Japanese stocks, the Nikkei here is down about 1%, losing for a fourth session. And yes, we did have that profit taking when it comes to the Takaichi trade rally, but also some concerns around how the spending might not have very clear sources in terms of its funding. Now, the Japanese yen here is still hovering around that 158 level against the dollar. When it comes to the broader Asia market, yes, that's still risk-off sentiment weighing on the overall market. However, we are seeing the Chinese market also losing a bit of momentum when it comes to kind of these pressure from the regulators to cool the market rally. And Kospi actually down 0.4% here after having risen for 12th session already. When it comes to the commodity space, also red across the board. There is a bit of concerns when it comes to the demand in China after prices, for example, for copper has surged to records. Back to you, Lizzie.
Winnie, thank you so much. Great stuff. That's Winnie Xu in Hong Kong. Well, still to come, it's day 2 of Davos. We'll be speaking to the Egyptian Minister of Investment and Trade about plans to attract more foreign money into the country. That interview coming at 6:30 a.m. UK time. But first, we're going to be speaking to State Street CEO Ron O'Hanley as Trump's tariff threats test market confidence. That's next. This is Bloomberg. Good morning. Welcome back to Bloomberg Daybreak Europe. It's just coming up to 6:15 a.m. here in London. And President Trump's posturing on Greenland, threatening to steal the spotlight ahead of day 2 of the World Economic Forum in Switzerland. Let's go live to Davos now. We can bring in Bloomberg's Jomana Basecci with a special guest. Jomana.
Yeah, that is true. So geoeconomic uncertainty, geoeconomic confrontation even, and a lot of buildup ahead of that President Trump speech tomorrow. Really happy to bring in our next guest, Ron O'Hanley, State Street CEO. Really good to have you here with us.
It's good to be here.
Let's talk about the uncertainty that seems to be dominating so far into what is the very early weeks of 2026. And again, the landscape seems uncertain geopolitically, even economically as well. How is that shaping up some of the discussions you're having with clients?
Well, it's certainly been an abrupt change because we ended the year with, it seemed like uncertainty becoming less and less of a factor. There had been a lot of talk about tariffs and things like that through 2025, and I think the tariff landscape was more or less known. It might not be liked, but it was known.
Yeah.
And so we went into the year, I think most investors thinking 2026 is going to be a pretty good year, and we can talk about that.
Yeah.
But obviously, it's geopolitics that really have changed things. We saw what happened in Venezuela, which surprised people, and now Greenland.
Yeah, what impact do the geopolitics actually have on capital markets? I mean, because it seems to be a case a lot of the times where it dominates a lot of the news, but actually in reality, very short-lived impact on markets.
That's right. And I think that's what's playing out now, although certainly we're in territory as it relates to Greenland that we've never really seen before. So we'll see how it plays out. The next few days are actually going to be quite important.
Yeah. Do you see signs? I mean, perhaps it's a little bit early, but earlier on, my colleagues were talking about the potential for the Sell America trade to come back again. You know, last year there was a similar episode where people tested this thesis of U.S. exceptionalism. Are you beginning to see signs of that happening, or at least discussions?
Not really. I mean, there's certainly discussions around it, but it's not yet showing up in the numbers. And as you know, last year, there was that same narrative, and we saw a little bit of it, but certainly by mid-year last year, that was basically over. And not only did we see a reversion back to the U.S., but also an over-indexing on equities.
Okay, so would you say people are actually overweight right now, U.S. assets? You know?
They would be overweight assets, and then they're also at an equity level that we haven't seen in over 15 years.
Okay.
So there's a lot of optimism, obviously, about the economy.
Okay, so let's circle back to what you were saying at the beginning, which is a couple of weeks ago, before the geopolitical storms, various geopolitical storms that have hit, most sentiment was pretty positive going into 2026.
And it remains positive.
Okay, and why? Why is that the case?
I think that if you think about it, there's a lot of factors that are setting up the economy to be quite good, led by the U.S. So if you think about it, there's the big, beautiful bill, which the real impacts of that in terms of business investment, in terms of the tax breaks, you've got tips. The average American is actually going to be taxed less, so that'll drive some consumer spending. But you've got a lot of other factors out there. I think tariffs had, again, up until recently, had been more or less factored in, and so now we know how to operate under those. You've got the dollar depreciation, which should help exports. Even things like the World Cup coming to the U.S. and North America broadly will drive a lot of spending. So the tailwinds in the U.S. are quite strong.
Yeah, I forgot about the World Cup. That's actually a good point.
Yeah.
How much of a swing factor is the Fed going to be? I mean, the market is pricing in about 2 rate cuts for 2026. And certainly the data recently has actually been quite robust.
Yes.
But you're going to get a changing of the guard. So how do you see that playing out and its impact on markets?
So I think you're going to get a change in the guard. Certainly a new Fed leader will have a lot of impact on direction. But over time, less so than I think people think. I mean, there's a lot of, if you will, safeguards in the system. I mean, the governors themselves have 14-year terms. The chair has a 4-year term. So you'll see some change for sure. But whether it'll be a departure from the way the Fed operates, which is very data-driven and what's actually going on. And right now the Fed's facing, on the one hand, declining inflation, on the other hand, a pretty robust economy. And what's uncertain really is unemployment.
Yeah. Do you worry about the challenges to Fed independence?
I don't think it's good when there's a perception that the Fed is not independent. I actually believe what I just said, that there's a lot of institutional safeguards. But one of the reasons the U.S. has the position it does in the reserve economy is there's a lot of faith in that, and we need to make sure that the faith in that system is maintained.
Yeah. One of the big topics of discussion last year was private credit. I'm curious to see what State Street is doing in that part of the market.
So we operate in 2 areas in that. The largest area is we service a lot of the private credit operators, right? The large private credit firms. And as they're growing, we're growing. And then, of course, last year we announced the partnership with Apollo, where we put private credit into a credit ETF with them. It was the first of its kind, and it enabled private credit to be available in that form. It's very conservative, purposely so, because we want to make sure that it works. But there's 2 things going on. One, there's an appetite for credit. And 2, it's really what we call the democratization of finance and making these products in a safe way available for a broader group of investors.
Yeah, and what about the compression of spreads that we've seen in that area? I mean, you could say, quote unquote, the easy money, so the early spread compression has actually occurred.
Yeah.
I guess you have to be a lot more discerning about the opportunities now.
Yeah, and usually compressed spreads mean that the credit environment is quite strong, and I think all the evidence continues to point to that. But with compressed spreads, the underwriters have to be very careful, right? Because there's little margin for error.
Yeah, there was a moment last year where I think people were beginning to get a bit concerned about the underlying credit. You know, you had those a couple of defaults, you had Tricolor, and First Brands. You had Jamie Dimon talk about potential cockroaches in the system, but we sort of moved past that now.
Yeah.
What do you think is the biggest risk to global markets? Where would the pullback come from if there is a catalyst?
So I think on the private credit side, I think it was, in my mind, overblown. If this had been a standard bank loan and a standard bankruptcy, it wouldn't have gotten the same attention. And, you know, the realities are there were banks involved in that credit, there were private credits involved in that credit, and it was a bankruptcy. I think, though, when you have times of credit stress, that's when the good underwriters get separated from the bad underwriters. Yeah. Do I think it'll be a systemic risk? No, I don't think so.
Yeah. Ron, really good to chat to you.
Good seeing you again. Yep.
That's Ron O'Hanley, State Street CEO. And we're also on a panel together. We're going to be discussing the outlook for debt in the global economy. So I'm looking forward to that. Lizzie, I'll toss it back to you.
All right, and we'll be back with Jemana in just a few minutes' time. Thank you, Zhu. But we've also got plenty of other big interviews out of Davos today here on Bloomberg, and that includes with the Finnish President, Alexander Stubb, the Bank of France Governor, François Villeroy de Galhau, the UBS CEO, Sergio Emotti, and the UK Chancellor, Rachel Reeves. Well, coming up on the programme, Spain's Prime Minister declares 3 days of mourning as the death toll from a deadly train crash rises. More on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to our top stories this morning. Spanish authorities have confirmed that at least 40 people have now died in a high-speed rail collision in the south of the country. It happened on Sunday night when the tail end of a train jumped the track, causing another train speeding past in the opposite direction to derail. Spanish Prime Minister Pedro Sanchez has declared 3 days of national mourning for the victims of the crash. Elsewhere, Donald Trump's proposed Gaza Peace Board faces key tests this week following criticism from Israel and questioning from Europe. Bloomberg understands that the US president wants the full constitution and remit of the committee signed in Davos on Thursday. France's Emmanuel Macron has declined an invitation to join the board, an invitation that was also extended to strongmen such as Belarus's autocratic leader Alexander Lukashenko. And the Federal Reserve Chair, Jerome Powell, is planning to attend Wednesday's Supreme Court hearing over the attempted dismissal of Fed Governor Lisa Cook by President Trump. The Supreme Court in October refused to allow Trump to immediately oust Cook while she sues to keep her job, allowing her to remain in position until the justices rule. And finally, the Italian fashion designer Valentino Garavani has died in Rome. He was 93. The master of haute couture became the arbiter of taste to movie stars and royalty for 5 decades, while outdoing the rich and famous with his own extravagant lifestyle. Valentino achieved global prominence in the 1960s when former US First Lady Jacqueline Kennedy became his most valued customer, wearing a Valentino dress for her marriage to the Greek shipping magnate Aristotle Onassis. Well, coming up on Daybreak Europe, we're going to go back to Davos. We'll be speaking to Egypt's Investment and Trade Minister about Cairo's push to boost foreign investment in the country. That interview coming up with Hassan El-Khatib with Jemana Basetchi very shortly, as we're looking at London still in the dark this morning and futures pointing lower on both sides of the Atlantic. This is Bloomberg. Good morning from London. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Risk off. Equity futures sink while Treasuries join a global bond sell-off as Donald Trump's latest tariff threats revive trade tensions. Gold hits a fresh record amid the flight to safety. Europe weighs its response to Trump's tariff salvo, but divisions linger as Germany urges caution on using the EU's most powerful countermeasure. Plus, with trade tensions set to dominate day 2 of Davos, we'll bring you interviews with heads of state, central bankers and global business leaders. A very good morning if you're just joining us. It's 6:30 a.m. here in London and your markets look like this. Today is the first chance really for US markets to react to President Trump's threat of tariffs on the 8 nations opposing his Greenland plans. Now, we already saw the sell-off in Europe yesterday. Markets whacked from cars to credit. Citi downgrading European stocks for the first time in over a year. Today, you're seeing US futures pointing even lower than European ones because of the catch-up that we're expecting to be played today. Now, if you were looking for a safe haven amidst all of this geopolitical uncertainty, government bonds are not it. You can see treasuries joining the global bond sell-off and outsized moves when it comes to JGBs as well, more likely to do with the Japanese story there. But on the front pages this morning, unsurprisingly, Greenland dominating once again. The Financial Times reporting this morning that Denmark's dispatched additional troops to the island and really underscoring that catch-22 that President Trump wants Greenland to be better defended, but is threatening tariffs in response to extra personnel. A head-scratcher for European leaders. Meanwhile, if we turn over to The Guardian here in the UK, they've got the letter to the Norwegian Prime Minister from President Trump linking his claims on Greenland to not being awarded the Nobel Peace Prize. And then finally, if we turn over to the Wall Street Journal, they've got Europe confronting the unthinkable, the end of its alliance with the US after 70 years. So the paper reporting a loss of trust in Washington among European populations. But you can get a roundup of all these stories and everything you need to know to get your day going in today's edition of Daybreak, which Bloomberg Terminal subscribers can, of course, find by going to DAYB Go. Now, let's get back to Davos because Egypt's seeking to reform its economy with a sustainable pipeline of investments from around the globe as the World Economic Forum gets underway in Switzerland. But the agenda in Davos today, of course, is set to be dominated by President Trump as potential new tariffs against European allies over Greenland threaten to upend the world order. Let's go back to Davos now and bring in Jumana Basecci, who's with our next guest. Jumana.
That's right. Thank you, Lizzie. So joining me right now is the Egyptian Investment and Trade Minister, Hassan El-Khatib. Good morning to you. Good to have you with us. In the introduction out to me, my colleague Lizzie was talking about some of the reform momentum that we've seen in Egypt. And it's been almost a year. Actually, it has been a year since the last time I spoke to you here in Davos. Talk to me about the reform momentum and its actual macroeconomic impact, the impact it's had on the Egyptian economy.
First of all, it's a pleasure to be with you, Jumana. I think it's a year since we had our conversation last year, and you're right. I think the momentum is continuing. I think the results are also overwhelmingly positive, which gives us a great momentum to continue with the structural reforms that we promised. I can give you some numbers on the 3 key policies that affect the investment environment in Egypt. On the monetary policy side, I think the numbers are telling. When you look at reserves, when you look at the remittances of Egyptians working abroad, jumping from 18 billion last year to 37 billion, the reserves exceeds $51 billion to date. More importantly, the key policy narrative today on the monetary policy side is the inflation. And the inflation is down from its peak of 38% to 12.3%. Similarly, on the fiscal side of things, the Minister of Finance is leading a major transformation that the title of which is easing, simplifying the journey of any corporate in Egypt. And he did package 1, package 2, and package 3. And I think the private sector is responding tremendously positive. 35% increase in our tax proceeds in 1 year. The private sector participation increased by 62%. And we're continuing with that. I think with the resumption of the parliament, we have additional packages to that effect. Similarly, on the trade policy, the trade side of things is actually improved the time and cost. We cut the time of cost of releasing goods by 65% in a year. We have more ambitious to get that number to 90%, and we will do this hopefully by the.
So I wanted to ask you about trade specifically, and part of your mandate obviously is to improve the competitiveness of Egyptian trade in an environment where globally trade is being reevaluated, supply chains are being reevaluated, new blocks, economic blocks are opening up. How has that affected Egypt?
I think we're seeing the global trends and shifts in the supply chain as a positive dynamics for Egypt. Egypt location is unique, and we're centered in 3 continents: Europe, Africa, Middle East. And you have trade agreements with all of these countries, almost 70 markets that are open with free trade agreements. And our competitiveness are now in play, whereby the supply chain shift can be very beneficial to any corporate that actually wants to produce to serve this wider 3 continents that we're centered in. And that's what we're seeing. We're seeing investments from European companies, American companies, Asian companies, Chinese, and every company that exists in Egypt is actually expanding because, again, the cost advantages and the expansion that we've done in the infrastructure makes Egypt now ready. I mean, just in ports, we expanded all of our ports, both on the Red Sea and the Mediterranean, to levels that we've never seen before. So we are ready from an infrastructure point of view.
So I need to ask you about transit through the Suez Canal. Last year, we spoke about the revenue hit since 2023. Yes. I'm curious to see where that number sits now, and also Maersk announcing that they're going to start using the canal again. Is your expectation that others are going to follow through too?
We're cautiously optimistic because we're speaking to most of the players. They are also cautiously optimistic. We're going to see slight improvement. But the numbers, again, will be verified mid-year. So, because, again, these ship liners would need to make sure that, again, the resumption of the traffic is consistent with their original plans. But anyway, I think it's going to be a major boost to our, again, foreign currency proceeds, but also to the resumption of what we want to do in terms of trade in general.
Yeah. I know, again, another big focus of yours has been attracting FDI into certain strategic sectors, be it around the airport, around telecommunications. What can we expect in that domain in 2026? Are there any big deals that we can anticipate?
I don't think it's about big deals. It's about continuation of what we've started. It's the industry and the focus on export is really what we want to do. Our export to GDP is not where we would want it to be. But again, as I said, industry, anything that is, I would call transitionary industries, intermediate industry, Egypt is very, very competitive. So today, all the white goods manufacturers, even without an OEM in the automotive industry, we have all the feeder industries like wire harnessing and others. And we're seeing more and more. So I was actually in the Suez Canal economic zone last week, and we started to see even solar panel manufacturing. We started to see deepening again, the value add in major industries that we started to see. So this is the future. Again, more and more of these value add products that will be produced in Egypt will create the right thing.
Yeah, and it's been a year now since the establishment of the Egyptian Sovereign Wealth Fund. You chair the fund. What role is the fund going to play in pursuing some of those objectives?
The fund was established longer than a year. I only assumed the responsibility of the fund a year ago. The fund mandate has been clarified over this year. Again, the focus is value creation, is value maximization of and return on the state assets. And we have a portfolio that is not large as we stand today, close to, I would say, $3.5 billion. What we started to report is the narrative, how to take public companies and we run them as private sector, change management, put the right incentive schemes, report like the private sector, the increase in the AUMs or the net asset value of these portfolio assets. But more importantly, it's the partnership with the private sector. We would list some of the companies, we will partner with the private companies. And some of the portfolio assets that we would have is actually the older quarters of the ministries that move to the new administrative capital. And you will see a lot of good news in the near future because we're, again, transforming many of those quarters into hotels. I was recently in the previous headquarters of the Ministry of Interior at the heart of Cairo. We're changing this to an hotel, cultural hub, and co-working space. And we'll see more development of that. That will change the face of Cairo because, again, tourism in Egypt is actually doing very, very well after the opening of the Grand Egyptian Museum. And we need more rooms. We need diversity in what we offer in terms of the tourism.
Minister, thank you so much. A pleasure to chat to you.
Thank you. Always a pleasure.
That was Minister Hassan El-Khatib, Investment and Trade Minister from Egypt. Lizzie.
Germana, thank you so much. That's Bloomberg's Germana Versace in Davos. And we've got plenty more big interviews out of Davos today, right here on Bloomberg, including with the Finnish Prime Minister Alexander Stubb, the Bank of France Governor François Villeroy de Galhau, the UBS CEO Sergio Ermotti, and the UK Chancellor Rachel Reeves. But coming up right here on Daybreak Europe, we'll discuss the threat of Trump's tariffs on Europe and Britain with Crawford Faulkner, former UK chief negotiation advisor who's helped lead the UK's trade negotiation ahead of its departure from the European Union and after. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:43 a.m. here in London. Now to some other top stories we're following for you this morning. The French Premier Sébastien Lecornu is to use Article 49.3 to adopt the 2026 budget without a parliamentary vote. The moves come after months of talks with opposition parties have failed to yield an agreement. Lecornu will likely face no confidence motions, but socialist lawmakers have indicated that they're ready to abstain and allow the government to remain in place after he made concessions on tax and spending measures. Elsewhere, Croatia's central bank chief Boris Vujicic is set to become the next European Central Bank vice president and the first person from Eastern Europe to join the institution's executive board. He secured the backing from Euro region finance ministers to succeed Luis de Guindos. He'll face a hearing at the European Parliament before European Union leaders have the final say on that appointment. And the IMF Managing Director, Kristalina Georgieva, says that it's too early to assess the impact of a potential new trade war between Europe and the US. She urged allies to find an agreement.
Too early to say what exactly the impacts of new trade tensions is, but we know that when we have more uncertainty, bad for business, bad for households. The best way forward, find a path to agreement. And that is going to be good for everybody, everywhere.
Well, France, Germany and the UK have responded strongly to President Trump's threat of new tariffs on European nations over their support for Greenland. Let's just take a listen.
We are constantly experiencing new provocations. We are constantly experiencing new antagonism, which President Trump is seeking, and we Europeans must make it clear that the limit has been reached.
Blackmail between allies of 250 years. Blackmail between friends is obviously unacceptable. To my knowledge, this is the first time that an economic instrument, tariffs, which you know we don't think very highly of, has been used for geopolitical reasons.
Alliances endure because they're built on respect and partnership, not pressure. That is why I said the use of tariffs against allies is completely wrong.
We do not want this escalation. We do not want a trade dispute with the United States of America. But if we are confronted with tariffs that we consider inappropriate, then we are in a position to respond. And that is precisely what we will be discussing in Brussels on Thursday.
For more, Crawford Faulkner, former UK Chief Trade Negotiation Advisor and Senior Advisor at Bradshaw Advisory, joins me now. So, Crawford, thank you so much for coming in. Today marks a year into Trump's second term. By now, we know we should take him seriously, if not literally. Do you take these tariff threats literally, or are they just a negotiating ploy?
Oh, I think it would be unwise to just think it's a ploy. I mean, at the end of the day, maybe it is a ploy. But, you know, for the moment, you've got to take it deadly seriously. And, you know, that's a reality you have to deal with. I think it would be very unwise to just think this is a game. And I don't think any serious politician believes that. I think you can see from the reactions, people understand very well that this is a crossing of a line, and you need to take it seriously.
And in terms of how the UK should respond, so far, Sir Keir Starmer's taken a softly approach. We've literally rolled out the red carpet here in Britain. He's had 2 state visits, Donald Trump. Is it time to end that approach and for Britain to now retaliate?
I don't think so quite yet. I mean, I know it's understandable you would say enough is enough, you know, but the reality is that you've still got at least a couple of weeks before the next so-called deadline arrives. And while it's deeply frustrating and deeply worrying, you have to use your behind-the-scenes influence to try and use every minute you have to build an off-ramp, to find a practical way diplomatically through this, so that you can lower the temperature. And I think you've got to keep trying to do that, not because you're unaware of the consequences or that you're unable to do anything else, but for the moment, even though it sounds as if it's a difficult task, and it is, you have to try and do that. If it doesn't work, you've at least tried, you've exhausted all the possibilities.
I mean, you've literally been across the negotiating table in these situations before. I do wonder how you would approach the Trump administration at this point. You know, the Trump administration was saying that they wanted more personnel to be guarding Greenland from Russia and China. When troops were sent, that's provoked this tariff threat. How do you deal with an administration that many are saying is completely illogical?
Well, you have to deal with it the only way you can, which is by trying to build as much dialogue and to get to as many people as possible with influence to try and find a way forward. I don't think if you're trying to do that, raising the temperature is something you have to try and avoid, because that only entrenches the administration in their present position. So I think most of that has to happen behind the scenes, and I know that's frustrating. You have to have your public statements which make clear what your position is, but you do have to try and build that behind the scenes. It's been done before. I mean, you know, you can see many occasions in which that quiet diplomacy with the UK has kind of worked. I mean, it's not been perfect, but it got us, you know, a reasonable deal in the circumstances. So it's not unknown to be able to do it. Frankly, and this is, I think, important to be said, and I don't want to seem like I'm a fraud because I'm essentially a tradie in these matters, but, you know, what underlies this is a deep security problem. And so, therefore, you've got, if you like, you've got two issues to deal with, and they're absolutely connected. The tariff thing is kind of an outrageous and bizarre addition to the armoury, and you certainly want to diffuse that. But you haven't solved this problem, even if you resolve that and you lower the escalation on that. You've still then got to deal with the underlying issue, which is a security question among allies, and you know that's certainly not going to be resolved in the next couple of weeks.
So you don't think that the security issue is a pretext for coming back to the negotiating table when it comes to tariffs? We know that there's further Trump would like to go when it comes to agriculture and certain standards when it comes to the UK deal.
I don't think so. I don't think it's a cynical game he's playing. I mean, that would be even more terrifying if you really believed that. I mean, you've got to keep your mind open to all possibilities, but I don't think so. You know, it looks like it was a reaction, perhaps to a misunderstanding of what happened with the group of military that went to Greenland. I don't know. But I don't think it's a pretext. I mean, at a certain sense, if it was a pretext, you know, you'd find it pretty bizarre and outrageous, but you say, well, OK, maybe we can deal with this. No, I think it's more complicated than that, and it's more deep-seated than that, and therefore you need to deal with it in substantive terms. I don't think it's just a tariff game. This is to do with something far more profound.
And so, in terms of the response to this, of course, there's the diplomacy between the UK and Washington. You've also got Keir Starmer possibly going to China, following Mark Carney's footsteps. Should Starmer be looking to bolster ties with China because of what's happening with Washington?
Look, I don't think that's the trade-off that's needed. I think you will always have to deal with what is our most important ally in as constructive a way as you can, even though it's incredibly difficult. So you have to do that. You're not going to suddenly say we're going to throw in our lot with China. That's just not credible or realistic, not just in the trade field, but in the more profound security field. Of course you should be, as you should be with all your trading partners, trying to build constructive relationships with them. It's not a zero-sum game. And the idea that you would overnight somehow be able to resolve this by running away into distant corners is not a solution either. I mean, yes, there are things that we should be doing longer term strategically to strengthen our relationships with East Asia more generally. We're in CPTPP. We need to build those trade alliances, but they're not overnight ways in which you can resolve this. This can only be resolved, if at all, by diplomatic, constructive discussion. And if that doesn't work, then you'll have to take stock as to whether, in actual fact, there are other more costly economically ways to try and resolve it. But I don't think at the end of the day, you should make the mistake of thinking that you can somehow deal with the tariff question in its own right. It would be nice if you could actually get an agreement to kind of lower the tone on that, take it off the table, but you're then going to have to deal with the question of what the alliance does with this conflict between the United States and the rest of its allies.
Mr. Crawford, thank you so much for your insights this morning. That's Crawford Faulkner, former UK Chief Trade Negotiation Advisor and Senior Advisor at Bradshaw Advisory. Advice, I'm sure, should be heeded at Davos. Plenty more coming up on the programme. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. In our last few minutes together, just a few terminal charts to set you up for your trading day. We've been dominated by geopolitics this morning, as is likely to be the case at Davos. But in the meantime, earnings season rumbles on. In the US, we have Netflix reporting very much in focus given the possible merger with Warner Brothers. The forward guidance will be crucial, and it's expected to be a solid fourth quarter given that series of smash hits, not least the Stranger Things finale. But turning over to Europe, we've also got Rio Tinto with numbers after market, and those we can see that the shares have been following the recent rise in copper prices. So copper here in the blue line, Rio Tinto shares in the white. Finally, turning back to the US, we've got D.R. Horton reporting earnings. They're out of Texas, the home builder, of course, focused on the cheaper end of the property market. Very timely, of course, given President Trump's push for home affordability. Our analysts saying that this company's scale and its focus on affordability do set it up for long-term gains. So we'll keep an eye on those earnings later on. But to access all of these charts that we've been using on Bloomberg TV, not just this hour but throughout the day, do look at the function CHRT TV Go on your Bloomberg terminal. In terms of the risk events on the docket for today, in just a few minutes' time we'll get the latest UK jobs data, those expected to show that cooling in the labour market continuing at the back end of 2025. We're also on the lookout again for a potential Supreme Court ruling on President Trump's Liberation Day tariffs, and in just a few minutes' time we'll look at Davos because the US Treasury Secretary Scott Bessent is expected to be speaking. He says the President is not going to back down on Greenland. Will he take up that spirit of dialogue that is, of course, the theme of this year's conference? If you've got your phone to hand, take a photo of the QR code here for our Bloomberg Economics Daily newsletter, on-the-ground coverage from Davos. The opening trade's coming up next, and Guy and Tom will take you to the open. This is Bloomberg Daybreak Europe.